Hey everybody, this is Helen Chong from HAYLEN Group, and today I'm so excited because I got to invite somebody I absolutely admire, Andy Ziminek from Platinum Coaching Group. Hey Andy, thank you so much for coming over here.
Thank you so much for having me, Helen. I'm super excited to be here. And I'm really excited to talk about this topic. We've been working together for 3 years now. I'm obviously the coach for HAYLEN Group, but as well as I coach a lot of the top producing teams in the top 1,000 that are around the country. So I love talking with the HAYLEN Group and with you especially about real estate investing because you are such an incredible source of knowledge about it. So thank you for inviting me. This is awesome. Let's talk
I
about.
know. We talked about how we need to set aside at least an hour just talk about real estate investments because it can be nonstop. So yeah, I mean, let's get started. I know you already had asked me some questions, but yeah, feel free to shoot me any questions and then let's see how we can like help other people to start their real estate investment journey.
I love it. Okay, great. One of the things that I notice a lot of times is that clients are coming to you to get into the investment game. Like they're maybe the first time investors. So when you have like a first time investor, kind of how did they get on the path? What do you do to get them started and
It's
become
so
a real estate investor?
totally, because it's actually a very common question. Like first time investors coming to us saying like, I don't know what to invest. And they don't even know how to go into it. They don't know what they should invest in and where they should invest in. So we actually go through this exercise to talk about like very first thing is like, what is your investment objective? Because why are you investing? And some people just like, well, I just want to get some cash flow because one day, hopefully, I can replace my current income and can start earning some passive income. Or some people just say, you know what, I'm just gonna I continue to work and I want to build equity slowly and maybe in an area that I don't have to put too much work into it. So it really depends on their investment objective and how much time they want to be involved into this real estate investment. So we talked a lot about like investment objective. Then we also talk about, okay, how much money do you want to invest in? Because sometimes if a client tell us that, for example, I want to invest about $100,000
Okay.
versus $500,000, then we want to say, okay, let's look at what kind of loan program can we get right now. Residential loan program and commercial real estate loan program, they are all different. So we have to make sure that we understand the dollar amount, how much they want to invest in. That's how we can calculate what is the property value that they're looking for
Okay.
and then decide like which area would be best fit for them. So there are quite a few different things that we look into, and then we're going to compare with areas and also the size of the investment property and how involved they want to be.
Well, that's fantastic. I want to break it down even a little bit further. So what you're saying, like, let's say I wanted to get into the game.
Mhm.
Like, could I get into the game with as little as 100,000 in to like maybe purchase my first property?
And it's so funny that some of our clients initially they would come to us like, I only have $100,000. Can I even start investing in California? And they'd be like, yeah, yes, absolutely. And they were shocked and surprised. As an example, we had helped some of our clients buy duplex to fourplex in Stockton for just $200,000 to $400,000.
Oh my
They,
goodness.
yeah, and they thought that they would never be able to buy something remotely close to the Bay Area. They thought it has to be out of state. And when we show them some of these properties, that's when they get so excited that wow, I can actually jump into this real estate investing even in California and just maybe around 2 hours from the Bay Area.
That's incredible. You do think like, oh, I'm sitting in like one of the hottest real estate markets in the country. Like, can I even play in this game?
Yeah.
And so I could absolutely see people wanting to take opportunity like that.
Exactly.
Now, let me ask you, do you see a lot of partnerships or joint ventures that maybe jump into the game for the first time?
And also a lot of times, like I talk to some first time investor, they do talk about partnership with their friends because their first thought is that, oh, I need a lot of money in order to get in. So it really depends. So if they do have $100,000, there are some properties that are available for them to invest in California. But of course, if they have like less than maybe like, oh, I have only $10,000-$20,000 to start, then it doesn't hurt to maybe joint venture with their friends, 3 or 4 of them, get their money together and then buy something together. We talk about some pros and cons, and sometimes our clients will be like, I really want to have full control, because we always know, right? When you have multiple people and multiple decisions need to be made, and not everybody is gonna agree all the time. And maybe they agree now, but down the road, maybe 10 years, 20 years later, when your family dynamic changes, that's when things could get very complicated. So sometimes we kind of want, we may be like telling them ahead of time, like, hey, think forward 10, 20 years later, what might happen? Is this really what you would like to get into right now? And then they can make that decision then.
Very smart advice. I love that. I'm sure down the road, people might have different ideas what to do with that property they bought, back when they were in their first investment. That's
Exactly.
great.
And we have seen so many of those like owners who have owned 20 plus years and now they want to dissolve. And sometimes it can be difficult.
Yeah, that's a good thing to think about. Let me just ask you, so if I were to start to get into the game or someone was new, do you steer them more towards commercial or residential, and kind of what are the requirements to get into each?
Oh gosh, that is such a great question. So we don't ever gear somebody towards residential or commercial. It really, again, go back to the investment objective. Give you an example for somebody who might be older, meaning like maybe they already like been working for 20 plus years and they have some money saved up and they really want to earn that passive income. They don't want to put their money in the stock market anymore, and they don't really want to be actively managing something. Then sometimes we would probably put them into a triple net property. A triple net property is a commercial real estate property. It could be a retail, it could be industrial property. So the tenants pay all the expenses, and you just pay the monthly mortgage payment, and that's it. And
Wow.
even the tenants talking about paying property tax and insurance, all the common area maintenance. In that sense, that will be much simpler investment for the client. Although there's risk in the commercial real estate, great thing about these commercial real estate property is like they might have a longer lease term. So it could be 5 years, 10 years, or even 25 years, depends on the property. But at the same time, if the lease only have a very short number of years left, then if they have to find a new tenant, it can take over a year to find a new tenant. And then placing a tenant, it could cost you money to place a tenant into the property because you have to fix up the property first. So we go over those kind of exercise with them. But then when some of the clients could be that, hey, I really want to get my hands dirty. I want to do the work. I'm not afraid of getting involved with the tenants. Then we were like, hey, multifamily could be really fun. It could be really fun to do that if you want to actively managing the tenants or fixing up the property. There's so many ways for you to, we call it value add a property and then increase the value of the property. So then those type of tenants, we might say, let's try residential property. It could be 1 to 4 units, and it could be 5+ units, which will be considered commercial real estate.
Oh, okay.
A lot of investors, they didn't realize that multifamily is still have a different categories. Multifamily from 1 unit to 4 units is considered residential properties. And the main difference is that the valuation difference and also what kind of loans you can get on those properties.
Is it easier to get a loan over one versus the other?
Well, actually, it's not really easy or not. It just, the way they calculate it is completely different.
Okay.
Yeah, for 1 to 4 units, typically for investors, you can put 25% down, and then they look at your income and plus about 75% of the rental income you can get from this property. And they'd be like, okay, it looks good, it qualifies, and I can lend you the money. And the valuation is based on sales comparison, meaning they're comparing surrounding areas, how much they're selling for, and this property will be approximately how much it's worth. Now, once it hit that 5 units and over on residential properties, is considered now commercial properties, and the loan program is under commercial loan programs. Now, the way they qualify you, how much down payment you can qualify is based on how much income this building can generate, a net operating income this building can generate to cover a ratio of the mortgage payment. So it sounds complicated, but it really see how well this building is performing in terms of financially, then that's how much money you can get for the loan.
Got it.
So in the Bay Area, sometimes we see a lot is 50% down on these type of properties in order to qualify for a loan. And then the valuation portion of 5 units and plus, that's based on income analysis. Again, is based on how much income this building can bring in, and then also what is the market cap rate. And then that's the formula that we're going to use to calculate the value. So I'm going to just simply say that value of the commercial property equals to net operating income divided by a cap rate.
Okay.
So once this is like the whole formula you need to know for all
Okay.
real estate.
I love it. I love it. Now, if somebody's very new, and can you help them understand that? Do you help your clients like really get down to what net operating income equals and compared to what the cap rate is? Like, how do you work through with your clients?
Oh, the first time is very like new, and they're very shocked and surprised how this whole thing, they think it's so complicated. But honestly, after we do a few exercises with them, they find it out, okay, now I get it. So just like anything else, so we run a lot of analysis, run a lot of spreadsheets for our clients. We first of all just kind of show them what is net operating income. It's simple. It's just how much money you make from this building.
Okay.
We call it the revenue, and
Right.
then and then minus the expenses,
Okay.
and that's your net operating income.
Oh,
So
yes.
it's kind of like just like any business. So when it comes to commercial real estate, we always say we are buying a business. We're buying the income stream. And that's why we have to focus so much on the gross revenue minus the operating expenses, which equals the net operating income.
Fantastic. I love it. Now, if someone comes to you, and I know some of your clients have asked you too, like, okay, Helen, what is the right place to put my money? Like, what are you kind of like, what are you looking at? What are the kind of questions that you ask them when they say, hey, I think I want maybe 20 doors, or should I stay safer with something that's 4 and under? How do you kind of help decide that with them and gear them in that kind of conversation?
Yeah, so first thing is like 20 doors. It sounds so great, right? Like, oh, I just want to get in and do 20 doors. No, we always look at first, it's like your experience level.
Okay.
If you're first time investors, we definitely don't recommend right away jumping into 20 doors, 20 units of building right away. One thing is that when you get a loan, your lender also will ask you this question: did you ever have any experience running a multifamily building? And it's still okay if you don't have any experience, but they really want to know that who are you going to hire as a property manager to run this building. So when we talk to our clients, one is that we want to understand the experience level, and we always say like it's okay to start smaller, or if you want to jump into 20 units, let's make sure you have very good property managers to help you manage these properties. Yeah, because that is really important, because the income potential of a 20 unit building is exponential, but expenses also can be exponential. So you have to be careful.
Right.
Yeah.
I could see that would be kind of a common mistake of someone who hasn't managed property before.
Yes.
What are some other maybe common mistakes of the first time investor?
Trying to manage the properties themselves. That is the most common mistakes that first time investors do, because they said they really want to learn how to manage the property themselves. Unfortunately, there are just so many regulations regarding tenant and landlord relationship, especially in the residential side. So yeah, if you don't understand, every jurisdiction, every city has their own laws and regulations. Even I can tell, even real estate attorneys do not know all of them. So when you hire a real estate attorney for your landlord tenant situation, you need to hire somebody who's specialized in that area, because another attorney may not understand this area's regulations. So it can get very complicated. So I always recommend our clients to hire a professional property manager to manage their properties.
Very smart, very smart. So let me just ask you then, if someone does come to you and they want to know more about these local regulations and the things that they need to kind of really understand about landlord and tenant laws, where do they go to get that education?
There are associations that you can be a certified property manager, then you can take those courses and of
Okay.
course, learn about that. And then there's also apartments owner associations where you can join as a member. And then for your local area, they usually share a lot of regulations. And even Facebook, sometimes Facebook, they have so many of these like groups, right? You go in there and they share all these like what is going on with your area. For example, if you're in San Francisco, you should join the one for the San Francisco multifamily groups, and then or Oakland for Oakland groups. They all have different regulations, and so it is important to join the right groups.
That's awesome. What great resources. Okay, now what everybody's going to want to know though is what kind of return should
Mm.
I be expecting on my investment property? Can you kind of break that down for us? Like as a first time investor, what kind of money, what kind of return should I see back in, I don't know, 5, 10 years after my initial investment?
Well, so this is we have this whole 10-year cash flow analysis that we do for our clients when we go
Wow.
into
Okay.
a commercial real estate investing. The main reason is, again, go back to we talked about valuation for a commercial real estate. Is all based on net operating income. So it's much easier for us to kind of predict what the number is going to be in 10 years or so. And then
Okay.
based on that, we see like what kind of property value is going to be in 10 years later. So now I cannot tell you like what kind of return you should be expecting. It's more that we're asking you what kind of return you want to get so that you feel like, okay, I'm getting better return than this other type of investments, right? So
Exactly.
yeah, and then sometimes you just want to diversify. I have clients say like, I'm okay with just 4%. And then
Yeah.
we have clients say like, oh, I need to have double digits or 20% IRR, internal rate of return. So we look at every single client differently. We don't have like a typical return on investment that they can get. Now, but how can you get something 4% and go to 20? Of course, anyone would want to go to 20%, right? The
Right.
main reason is some clients will say, I just want 4% because they just want to go into a market, get for example, a triple net property we mentioned earlier. We
Mhm.
already know for 25 years, this is the lease amount, this is the annualized increase on the lease amount. So it's very steady and they're paying for all the expenses. And all you need to know is like every year, I'm going to get this much money and this is the return. The lower the return typically is like very stabilized investment. You don't have to worry too much. Now, if you're willing to take some risk and do some work, we might be able to get that double digits number or even 20+% return
Wow.
by doing a lot more work in it. So
Okay.
that's why we look at different clients and determine that.
When you say a lot more work, kind of give me some, break that down. Are you talking about just actually managing the property itself on a day-to-day basis, or what kind of work are you talking about?
So the work that I'm talking about is, for example, if you're buying a apartment buildings and the market rent for those units, two bedroom, let's just say they're all two bedrooms units for 10 units,
Okay.
and they're the current rent in this building, they're all paying $1,500 per month.
Okay.
You know for a fact that hey, the market rent should be $2,000 per month. And
Oh, okay.
again, go back to every city has different regulations and rent control. So I'm just talking about in general, general sense. So, but in order to get to $2,000 per month, you have to do something. You probably need to maybe fix up some of the units, make it look a little bit prettier, and also, or maybe you have to have some turnover with the tenant. So it's going to be like over a few years of work that's slowly turning every single unit in order for you to get to that $2,000 level per month rent.
Excellent.
And or maybe this property wasn't managed correctly, and now you can come in and figure out how can I reduce my expenses. Maybe there were some water leaks that you can fix, or maybe you can change out some light bulbs, so like the common area light bulb, so that you can reduce your electricity and utility cost. Or property management fee, something that you can reduce your operating expenses so that your net operating income would be higher.
Got it.
Yeah.
Absolutely.
Because the net operating income is higher, your property value is going to be much higher.
Absolutely. So we're going to put money in either on the top of the line or the bottom of the line. But either way,
Exactly.
what we're trying to do is obviously get a greater return. And as they always say, no risk, no return.
That's right.
Okay, so let me just ask you now, you're sitting in obviously the white hot market of Silicon Valley here in the Bay Area. Is it easy to invest in this market, or what kind of markets would you even suggest a new investor start getting into?
I wouldn't say it's easy. I think Bay Area, obviously, we all know is it can be quite expensive. And as mentioned, like for commercial real estate in the Bay Area, typically we need about 50% minimum in order to make sense of the net operating income to cover at least we call 1.25 ratio of your mortgage payment. So it could be a little bit daunting when somebody here is like, I have to put more than 50% in order to invest into commercial real estate. But again, we're talking about the core area of the Bay Area. But if you look outside of Silicon Valley, look outside of San Francisco, Oakland, there are areas like Tracy, Modesto, Stockton, and even Sacramento. These are areas that's just like about an hour and a half to 2 hours away that is worth investing. And you can still feel like it's close enough that I can go there, but it's not so close that I'm so like I want to be there all the time.
That's
So there's
awesome.
still areas that they can try to invest in.
So thinking about that too, what about if I wanted, is it risky to invest out of state? What if I wanted to buy something in Florida or Tennessee? Like, is that feasible if I don't actually live there?
Absolutely. That's how I started my real estate investing. I personally, I actually love the fact that I cannot go visit my properties because otherwise I'm one of those people like, hey, what happened to this and what happened to that? So, so it's there's a lot of challenges initially if you try to invest out of state because you have to build a very strong team, trustworthy team out there. The biggest mistakes I've seen people is that they don't check on their property managers who are managing their properties when they're investing out of state. You do have to have a group, or I call them your team, right? The team that helping you. The property manager obviously is your number one people, but how do you double check your property manager's work? And then they need to know that just because you're out of state doesn't mean that you're going to close your eyes and let you run everything. You need to check on them as well.
Okay.
You can have project managers, you can hire separate project managers to watch the remodeling projects. You can hire inspector from time to time to check on the work as well. So I think there are a lot of different ways, but then initially it's going to take some time to build that team, a trustworthy team. But once you build it, it's so much smoother. I had a really tough time for the first few years with my very first out-of-state investment property. I would say first 5 years probably. But then
Yes.
since then, it's been so smooth sailing, and I'm super happy about it.
That's fantastic. So, just about how much should someone be thinking about to pay for a property manager? Like,
Mm,
what does the property manager make? And
great question.
how do I find a good one?
So the property manager is typically they get paid from the gross rent collected.
Okay.
We the very first thing we always tell our clients that do not pay a property managers a set fee, a flat fee every single month, no matter if they place the tenants there or not. Because then what is the incentive for them to help you find a tenant, right? Yeah,
Right?
exactly.
They're going to get
And
paid
especially
anyway.
good
A
tenant.
good tenant, right?
Yes. So you want to make sure that your property management agreement talk about is the percentage of the gross rent collected. So we have seen the more units is the more unit it is, the cheaper it can be, obviously. But we start seeing about 10%, which is like kind of like what we typically see is a 10% of the gross rent collected. And then as you have more units, it can come down slightly to 7%. I've seen as little as 4% when it's like much larger building.
Oh, okay, okay. Now let's say that I don't want to pay the property manager. I want to do it myself.
Mm.
And I found a great little duplex, maybe in Stockton, as you were saying. What are some of the things that maybe I might be over my head with as trying to manage that property for the first time? Or is it capable? Am I capable of doing that? How much time is it going to take for me to manage my own property?
Depends on the tenants you have.
And then
And you
let's say
never
I
know
don't
until
know
that
how to
tenant move
find good.
in.
Yeah. What if I don't know how to find good tenants? How do I start there?
Yeah, so that's the thing, right? So a lot of our clients I've seen, some of our clients who initially they want to manage their own, I mean, they can simply just put an ad on Craigslist, on Facebook to look for tenants.
Okay.
Now, I have to tell you that I don't know how many times we've seen landlords saying things that is considered discriminatory.
Yeah.
And they could have gotten a huge, huge trouble if the applicants or the tenants sue them for it.
Wow.
So there are things that you have to be really careful as a landlord, what you can say and how you screen the tenants and who are you going to allow to rent your unit. As an example, if somebody say, oh, I receive a few applicants, and a number one person is a guy who's a doctor and he was gonna live there by himself. Another person is like, oh, they just got married but they don't have kids yet. And another one, the third one, they're married and they have one baby, and then you chose the third person because they gave you a very good story. It's like I really want my baby to grow up in this home. It's perfect for me, and I chose that. And
Oh,
then the first person can say, did you just discriminate me because I'm single? The second person, did you just discriminate me because we don't have a baby? So
yeah.
these are something that we have to be very careful on, because if they all qualified financially with their income, you cannot say, I'm going to pick this one, not that one. You have to pick the first one who applied and who's qualified as well.
Wow. Okay. So, and I think it probably on the other side, like when we have to make, we have a bad tenant, there's probably a lot of legalities and a lot of risk trying to get them out of the property. Uh,
Absolutely. And it
what are,
really depends on the city, again, where you are and what kind of regulations, and so many different regulations. As an example, Alameda County, they've been having the eviction moratorium for the longest time since COVID happened.
it's still in place.
It's still in place. Believe it or not, Oakland is going to finally remove the eviction moratorium in July.
Wow.
This is
Wow.
not right now. They still have the eviction moratorium, but it's still going. So you really need to know where you're investing in and understand the regulations over there.
Wow. That's amazing. Okay. So let's talk about diversifying my portfolio.
Mm.
Let's say that pretty much most of my money is either wrapped up in my 401k or in some stocks. And I'm like, hey, maybe I might want to get out of the stock game, or should I keep them all? What should I do? Like, how can I pull money out to just jump into real estate investing?
Well, I think everyone, if when you're deciding whether you should pull money out of your stock portfolio, I would definitely talk to a financial planner first.
Okay.
And we work closely with some of the financial planners and to understand what their financial picture looks like. Because the last thing we want is that you pull everything out, and then you put everything in one basket, and then you realize like this is not what I really known to do, and this is not what I'm expecting. So we don't ever recommend somebody to put all their stock money into real estate.
Got it.
However, there are also real estate funds that you can invest in. Um,
Oh,
yeah,
now
so
I don't have
these
to worry about it. I can just invest in the fund.
exactly. So it almost kind of like stock market, and you're not really managing yourself. And one thing that you just have to be very careful is the company who are investing in these properties. So these are typically it's kind of like a syndication. Much larger projects could be 1 million square feet industrial property.
Wow. Okay.
It could be, yeah, it's like 300 units of condominium projects that they are investing in. So you need to figure out who are these people, what is their experience level, are they trustworthy? And then when you invest in them, they basically just giving you a check every single month. And at the end, if the company decide to sell it, then that's when you can get the rest of the return. But yeah, it sounds really great. It's just there's always risk in this type of investing, but it's very ideal for those people, especially saying like, I really don't want to invest. I really don't want to be actively manage anything, but I really want to invest in a part of such a big, amazing projects together with
That
other people.
I could totally see that. Maybe like hoteliers or
Yeah.
retail space or something like that, where people may just want to put their money over there and let them build it, let them manage it, and kind of let it
Exactly.
ride. Yeah.
Exactly.
Well, Helen, I just want to ask one more question because I know a lot of your clients come to you and you speak about this a lot and do a lot of education. If you had someone that wanted to talk to you about investment strategies, what's the first step in the process? What do we do? What can they expect when they work with you and your team?
So we do have a Calendly link that we can share with everybody who wants to get a 30 minutes investing consultation with me. And our first 30 minutes, we actually send out a form first for them to fill out so we can understand, I can understand a little bit better about like, what are you looking for? What is your investment experience like? And what is your investment objective? And that's one thing. We want them to start thinking about it before we jump onto the call. And then once we're on the call, I'll get to look through that and then talk to them in person and see what their expectation is. And 30 minutes can be pretty insightful. A lot of times we at least identify, okay, now we can identify action item for our next call if they do want to move forward to the next call.
Okay. And is there any charge for that? Is there a fee for your 30-minute consultation?
No, absolutely not. Like I said with you earlier, I love talking about these things. I get very excited when I can talk to the first time or second time, third time real estate investor about these things. I want to learn about what do they want to do. I want to see like what I can help them and add value to their financial future is something that I really enjoy doing and always thinking about like, especially when they retired, how they can look back. I was part of this process, helping them to build that portfolio.
Amazing. Amazing. Well, I think this is an incredible amount of knowledge. You just know so much about this space. And I always love watching you, especially with your clients and with your team, helping others find the right investment property for them. I can't wait to see, how you can help others do more with their money when it comes to real estate investing.
Absolutely. I hope so too. Thank you so much. And I'll talk to you later.
Bye. Thank you.